Welcome back to Explain the Charts, where we demystify the complexities of the stock market through in-depth analysis. Today, August 14th, 2025, we're putting Intel Corporation, ticker Intel, under the microscope. Intel stock has been a focal point for investors, navigating a landscape filled with both significant headwinds and potential catalysts. As we begin, let's look at the broader daily chart to get a sense of its recent journey over the past year. First, let's discuss the current events and news shaping Intel's immediate outlook. As of today, August 14th, 2025, Intel is trading at $22.53, marking a 1.26% increase for the day. However, looking beyond today's minor gain, the past year has seen Intel's stock rise a modest 7.9%, and analyst sentiment remains mixed to negative overall. The average 12-month price target stands at $22.17, suggesting a slight downside from our current levels, with a consensus rating of hold or even reduce from many prominent firms. Delving into the bearish sentiment, concerns over high restructuring costs and persistently declining revenue estimates are weighing heavily on Intel. The company faces fierce competition across all its core markets, with rivals like AMD, Nvidia, ARM Holdings, and Qualcomm aggressively gaining market share in critical segments like CPUs and data centers. If we pinpoint the chart around late July 2025, specifically on the 24th and 25th, you'll observe a sharp decline. This notable drop correlates directly with Intel's Q2 2025 earnings report, which, despite revenue exceeding estimates, missed analyst expectations for EPS. The market clearly reacted negatively to the profitability concerns signaled by the EPS miss. This specific event highlights how sensitive the stock is to earnings performance in a competitive environment. Further intensifying the bearish outlook is the recent news of Intel's plan to lay off up to 20% of its global manufacturing workforce starting next month, in September 2025. This drastic measure, reported by Network World, underscores the company's significant financial challenges and faltering demand for its next-generation AI PC chips. Their foundry business, aimed at competing with TSMC, is struggling to attract new clients, further highlighting execution risks and technological gaps. Global trade turmoil and tariffs are also impacting customer behavior, leading to delays in AI upgrades and a tendency to stockpile legacy chips, contributing to the revenue decline. This news, even if officially implemented later, likely reflects ongoing struggles that have been priced into the stock during its previous downtrends. However, it's not all doom and gloom for Intel. There are compelling reasons to be bullish, particularly in the long term, if their strategies pan out. Intel is actively promoting its AI chips, with major PC manufacturers like Asus, Dell, HP, and Lenovo deploying them, indicating strong adoption. Their Xun6 processors are also gaining traction in network transformation and AI acceleration, leveraged by industry giants like AT&T and Verizon. Recent developments, such as CEO Lip-Bu Tan meeting with President Trump to discuss strengthening U.S. technology manufacturing, are seen by some as de-risking factors and a potential competitive advantage in AI sales. Additionally, an Intel-backed AI chip startup, Rivos, is seeking to raise $500 million to directly challenge NVIDIA in the AI inference market, showcasing their commitment to innovation. Now, let's pivot to the technical analysis and examine INTC's price action on the daily chart over the last year, from April 2024 to today. We can clearly see a significant downtrend from highs around $44 in April 2024, gradually making lower highs and lower lows. Major drops occurred in early August 2024, December 2024, and another steep decline in early April 2025, followed by the recent Q2 earnings drop in July 2025. These declines often coincided with high trading volumes, indicating strong selling pressure. Conversely, we've seen several significant bounces, notably in mid-February 2025, when the stock surged by over 11% in a single day, reaching close to its 52-week high of $27.55. These rallies, however, have largely been met with strong resistance and subsequent pullbacks, confirming the underlying bearish trend. Looking closer at the daily chart from October 2024 onwards, we observe periods of accumulation and distribution within this broader downtrend. After hitting lows around $19 in September 2024, the stock managed to climb to the $26 level by early November, but struggled to sustain this momentum. The subsequent sharp drop in December 2024 signals that overhead supply remains significant. The bounce from mid-March 2025, where the price rebounded from under $20 to over $25, shows periods where buyers stepped in, but again, the resistance at higher levels proved too strong. This repeated pattern of rallies failing to break significant resistance, followed by declines, is a characteristic of a weak rising trend, as also noted by analysts. It emphasizes the importance of watching these previous high points for potential reversals or continuations. Let's zoom into the 1-hour chart, focusing specifically on the impact of the Q2 2025 earnings report around July 24th and 25th, UTC time. Prior to the earnings announcement, Intel was trading in the mid-$22 range, showing some stability. However, the significant downward gap at the open on July 25th, right after the earnings miss on EPS, is striking, with the price plummeting from around $22.63 to open at $20.675. This massive volume candlestick indicates strong selling pressure immediately following the news. The stock then attempted to consolidate and recover, but struggled to regain its pre-earnings levels. We can see a brief bounce on July 28th, but it quickly faced resistance, reinforcing the negative market reaction to the earnings results. This hourly view perfectly illustrates the immediate, dramatic effect of fundamental news on price action. Now, let's scrutinize the very recent price action on the 15-minute chart for August 13, 2025, to gain insights into intraday volatility. We see the stock consolidated in the $21.60 to $21.70 range for much of the morning UTC. There was a notable upward move in the afternoon, pushing the price towards $22.20, accompanied by increasing volume, suggesting some buying interest. However, this rally also saw some resistance around the $22.20 to $22.30 level, indicating that sellers are still active at these higher prices. The market closed yesterday, August 13th, around $22.22 UTC, and as we noted from the news, Intel is currently trading around $22.53 today, August 14th, showing some positive momentum at the open. This intraday perspective reveals the ongoing battle between buyers and sellers, with resistance points proving challenging to overcome even during rallies. Watching these microtrends can be crucial for short-term trading decisions and entry/exit points. In terms of key price levels, the $19 mark stands out as a significant support level, repeatedly tested and held during major pullbacks in 2024 and early 2025. This aligns with Investopedia's analysis, highlighting its importance for long-term stability. Immediate support can also be found in the $20 to $20.50 range, which has seen considerable price action and acted as a pivot point recently. On the resistance side, the $22 level, which we are currently testing, acts as an initial hurdle. A sustained break above it would be a bullish signal. Further key resistance levels are identified around $24 and then $26, particularly if the stock aims to retest its 52-week high of $27.55. These levels represent areas where selling pressure has historically intensified, and a breakout would require strong fundamental catalysts and sustained buying volume. To recap, Intel is caught between the structural challenges of intense competition and demand issues, reflected in layoff plans and EPS misses, versus its ambitious IDM 2.0 strategy and AI initiatives. For a short-term bullish outlook, breaking and holding above $22.50 with significant volume is crucial. This could lead to a test of $24. The likelihood of a sustained short-term rally is moderate, perhaps 50 to 60%, contingent on positive market sentiment and the absence of further negative news regarding competition or restructuring. A breakout above $24, while less likely at 30 to 40%, would signal a more robust short-term reversal, possibly reinforced by breakthroughs in AI chip adoption. Conversely, if Intel fails to hold above $22 and retreats, a retest of the $20.50 and then the $19 support levels is highly likely, perhaps 70 to 80%, especially if the upcoming layoffs negatively impact investor confidence. In the long term, the success of Intel's 18A technology launch by the end of 2025 is paramount. A successful launch could drastically improve the stock's prospects, making a sustained recovery to previous highs a stronger possibility. Investors should closely monitor news on Intel's market share in CPUs and data centers, any updates on their foundry business, and further developments in their AI chip sales. These fundamental factors, combined with the key price levels we've discussed, will be vital when deciding your trading strategy for Intel.